It is my privilege to welcome you all to our 2026 National Budget Analysis. Each year, the budget provides a roadmap of the country's priorities, showing how the government intends to raise and spend resources to balance growth, stability, and social development. This year's budget, presented under the theme Consolidating Economic and Social Gains Towards a Prosperous, Resilient, and Equitable Zambia, comes at a critical moment. The metrics and fiscal policies we'll review today highlight not only the scale of public spending, but also the choices that are being made between revenue mobilization, debt management, and investment in key sectors such as health, education, and infrastructure. Our task this morning is to analyze these figures to understand their implications for the direction of policy and how they may impact Zambia's economic and business environment in the year ahead. So as we go through these numbers, let's remember that the budget is more than the numbers. It's a roadmap of Zambia's priorities and choices. The 2026 national budget has been set at 253.1 billion kwacha compared to 217.1 billion in 2025. As a share of GDP, this represents an increase from 26.6% to 27.4%. This upward shift indicates a higher level of public spending in relation to the economy's size. So looking at how the budget will be financed, we just thought we'd give you a brief background. We've got domestic revenue, which is projected at 206.5 billion kwacha, which is an increase of over 32 billion from last year. Foreign financing is expected to fall from 19.4 billion in 2025 to 12.9 billion in 2026. Domestic financing will rise, moving from 15.4 billion to 21.6 billion. And grants are projected to increase from 8.2 billion to 12.1 billion. So the structure of the resource envelope, therefore, places greater reliance on domestic revenue and financing with reduced dependence on external borrowing. On grants, despite the rise in projected grant inflows, government policy continues to emphasize self-reliance. So as the Minister of Finance stated during the July 2025 mid-year budget briefing, the days of grants and donations are behind us. Zambia must come to this new reality that as a country, we have to look inwards and not outwards. I just thought we also quickly explain or give you information on the expenditure side. So allocations are distributed across key functions. The first one being general public services, which takes the most significant share of 92.6 billion. And this amounts to about 37% of the total. Economic affairs follows with 58.7 billion or 23%. And education is allocated 33 billion, which is about 13%. Health receives 26.2 billion, which represents 10%. And finally, social protection accounts for 15.7 billion. So these were the major sort of expenses that we thought of just sharing with you. Other functions include defense at 19.9 million. Public order and safety is at 9.6 billion. and smaller allocations have been allocated for housing, environmental protection, and recreation. This distribution reflects the balance between administration costs, growth-related investment, and social spending. What are the macro objectives? So the budget also outlines 6 macro objectives for 2026. So the first one being the real GDP growth is projected at 6.4%, which is slightly lower than the 6.6% that we achieved to be achieved in 2025. Inflation is expected to remain within 6 to 8% target band. The fiscal deficit is targeted at 2.1% of GDP, down from 3.1% in 2025. And domestic revenue mobilization has been projected to reach 22.3% of GDP, up from 21.3% the previous year. International reserves are also expected to cover more than 4 months of imports. So together, these objectives outline a strategy for sustaining growth while reducing the deficit, enhancing revenue collection, and maintaining financial stability. So in summary, the 2026 budget outlines a larger resource envelope, as we've seen, and primarily based on domestic revenue, and allocate spending across both economic and social functions. The macroeconomic objectives reinforce fiscal discipline while aiming for steady growth and stability. So our discussion this morning will provide a closer examination of these numbers and their implications for our businesses, and how we'll actually align this with Zambia's broader development agenda.
It is my honor and privilege to present to you the budget changes for the 2026 fiscal year as presented by the Minister of Finance on the 27th of September, last Friday. But before I go to the actual budget as presented, I just want us to recap on the pre-2026 budget amendments as amended last month in August, because they will also affect the same fiscal year that the 2026 budget applies. So I'll just highlight 3 amendments which were passed and now into law in August last month, and these are so I would term them as pre-budget, pre-2026 budget amendments. So the first one is, and obviously the context of this is like the CEO Deborah Nonde has noted, that the minister indicated that the days of grants and donations are over, and we should be looking inwards. And these pre-budget amendments, as passed in August last month, were meant to finance supplementary budget, which was meant to support our debt repayments. And so it was necessary to have the resource envelope as well as the expense side. So the first amendments, as done last month before the 2026 budget, was the introduction of minimum alternative tax, otherwise called MAT. MAT will be a tax payable on 1% of your gross income, gross turnover, and regardless whether you have profit or loss. Obviously, we are yet to get more administrative rules around the nitty-gritties of compliance regarding MAT, because those have not yet come out. Please note that this is law now, and we are all subject to minimum alternative tax. This is for taxpayers who are registered for corporate income tax. Obviously, it doesn't include those on turnover tax and those on presumptive tax. So the idea is all taxpayers who are registered for income tax will pay something to the government. Those in losses will pay the minimum tax, which is at 1% of your turnover. And then it can be carried forward for 5 years and be used as a credit against the tax liability which may arise in the next 5 years. And if there is no tax liability enough to offset your minimum alternative tax, then you forfeit to the government, unfortunately. And then there was also increase from 15% to 20% of withholding tax on treasury bills and government bonds. Although these measures are meant to raise revenue, as I have said, for the debt repayments, to support the supplementary budget. And of course, we had also the increase in excise duty and surtax on juices, spirits, tobacco, betting services. Surprisingly, beer excise duty reduced. I don't know. I don't know the rationale behind that. I wish we had the minister to maybe explain. Okay, so these are the 3 amendments which were done before the 2026 budget. And now I'll delve into the amendments which were contained in the budget speech by the minister. And by the way, these pre-budget amendments are law now, and we are all subject to this as long as you are within one of these categories. So I'll now delve into the actual amendments as presented by the minister in the 2026 national budget. The first one is, I'll go into income tax. So this basically extends the AIT, advanced income tax, that 2,000 which you pay incidentally as you are making an outward payment outside the country if you have no tax clearance certificate. And that was only applicable to the banking transactions, but now it has been extended to include other non-bank institutions and even other platforms like mobile payments. So all of us will need to have the tax clearance certificate to make sure that we avoid the AIT. And there's also removal of 5-year limit on interest carried forward. So after you have calculated your EBITDA, earnings before interest, tax, depreciation, and amortization, then you discover that you are supposed to have your interest limit does not qualify for deduction. It was carried forward before this amendment, proposed amendment, it was carried forward for 5 years, and you could utilize it within 5 years as long as you qualify after recalculating your EBITDA in those years. But now, that limitation of 5 years has been removed. That means that even if your interest does not qualify for deduction in your income tax computation this year, you can carry it forward as long as you have not yet utilized it. You perpetually until you have utilized, and I hope this becomes law because obviously it will help many clients and taxpayers. The next one is the reduction of removal of penalties on voluntary disclosure. I think very good measure. So if you have realized you did not declare all your turnover, you made a mistake, you made an omission, you can go back to ZRA and tell them that, at your own volition really, tell them that we missed out these declarations. Once you have done that, currently they will charge you penalties, but obviously they, under their discretion, they can waive that penalty. But now there will be no discretion at all. So there will be no penalty, and I also hope this goes through. Turnover tax, as our Kahuti team was presenting, turnover tax has also been the penalty for late payment of turnover tax. Late payment of turnover tax has been reduced from 5% to 0.5%. Now, the next two items are not proper tax per se, they are levies and other fees. And these are the revision of mobile money levy, quite substantially actually. I think everyone will have to pay tax under this. And also this includes person to person, and that person to person can be yourself, from your own account to your own account. I don't know how this works. So Kafumu will have to come in and ask further questions on this to interrogate it further. And of course, the increase in toll fees, except for buses, small and light vehicles. Small and light vehicles means those less than 6.5 tons. So for the rest of the heavy-duty vehicles passing through toll plazas, the fees have been substantially increased, obviously to capture and collect revenue. Under the VAT, there are three major changes: zero rating of piped water, probably to encourage clean water supply to citizens. This will now, zero rating means the VAT going into the expenses used to supply piped water. That VAT now will be claimable. Before that, it was exempt, so you wouldn't claim the VAT, so it was forming part of the final cost. The next amendment is extension of intending trader period for hydro power generation from 7 to 10 years. So I think I have an idea why this has been done, because obviously we want to address the power shortage challenges. But maybe when Kafumu comes with his team, they will interrogate further why hydro, why not other sources of energy. And of course the provision of principal tax waiver under VAT. Principal tax waiver under VAT. So the minister can now waive principal tax liability under the prescribed conditions as recommended by the Commissioner General. Under excise and customs and excise, the duty removal on the knockdown, complete knockdown. So this obviously is encouraging manufacturing and assembly of motor in the country. This applies to trucks, so assembly of trucks, electric vehicles, tractors, tricycles, and motorcycles. The importation of the complete knockdown, the parts you use to assemble the complete vehicle, duty has been removed from that. Increased duty on single-use plastics from 30% to 100%. To discourage use, obviously, and the minister also indicated that they'll actually ban them in the next 3 years. Reduced the excise duty to 15% on hybrid vehicles. Obviously, these are energy efficient and environmental friendly vehicles. So 15% now is proposed. reduced from 30%. Increased customs duty on powdered milk, cheese, cream to discourage import of these already manufactured. But at the same time, there is removal of duty on importation of the machinery which is used to manufacture these. So you can see the thought process there. They want manufacturing to take place in the country and not outside the country.
So when we're looking at macroeconomic objectives, for me, I think the interesting thing to see was that now the growth path, the blue line, is getting closer and closer to what the government is targeting. So if you look at the chart there, GDP projections are now aligning with the actual outturns. So as Debbie said, for 2025, it was 6.6. The projected outcome by the end of this year is expected to be 5.8. So slightly lower than what was anticipated, but still in the right direction. And then the government has also tapered off or eased the ambitions, reducing them to 6.4% in view of the macroeconomics. Inflation, I think the impressive thing for me is that it's moved from a target of being a medium-term target to being an immediate target. So now they are talking about within 2026, they want to see 6 to 8%, meaning that the central bank is more confident now that the macroeconomics of things is becoming more stable. So you can run through the indicators, and they've already been highlighted by Debbie. I think the main thing to think about with these indicators is talking about the fiscal side, where we are thinking about government taxes and where the government then spends its money. So if you are thinking about those indicators, then we are seeing relative stability coming into our economy from a fiscal point of view. If you're thinking about inflation, the exchange rate, which is not part of the framework, again, you're thinking about stability. So are prices erratic, unpredictable? Is the exchange rate erratic and unpredictable, making it difficult to plan? Or is it becoming more stable and predictable? And that's what you want as the base ingredient for you to then have an economy that would grow, where you can consolidate your economic and social aspects like growth and socioeconomic outturns. I think the main thing for me that's missing in the framework is the jobs, right? This is one of those very important things. Other economies in the world track jobs. The US economy tracks jobs on a quarterly basis. So they've invested in a lot of robust systems that are able to tell them how many jobs are being created, where, what types of jobs, what's the quality. If jobs are so important to us, why don't we have them on the macroeconomic framework? We have inflation because it's important. And we have a robust system for collecting inflation information throughout all the districts, and it's aggregated on a monthly basis. And it informs the central bank independently about what they're doing on prices or whether their instruments are changing. We do quarterly labor force surveys through Zambia Statistics Agency, but the publication of those statistics comes with such a big lag that by the time the statistics come out, it's almost futile to think about, for example, the labor force survey that is currently published is for 2023. So what's it telling us about 2025, 2026, and so on? It becomes an investment that is not as effective as it could have been. So for me, big question in our macro framework, where are the jobs? We can move. Again, Debbie did a really good job of summarizing the expenditures by function. For me, more than where the money is coming from, the important thing is where are we going to put our money within the economy to stimulate growth, to stimulate poverty reduction and things like that, to stimulate private sector development. So the government has ramped up expenditure for road infrastructure. I think it's a good thing. And then constituency development fund. has continued to increase. So for roads, it's about 24% increase in nominal terms, or 25%. So quite a big increase there. For constituency development fund, about 11%. For the one that I found interesting was on aerial geospatial or geophysical mapping. So this is mapping, using aerial technology, mapping our mineral resources and trying to figure out where our minerals are. And then in 2026, there's also a new highlight that's been included at the highlight level, which is artisanal and small-scale mining, which has been allocated about 120 million. So I think these are worthwhile investments that the public sector or the government is doing. But then I ask myself, are they enough? Considering the mineral wealth that Zambia has, considering the strategic placement that Zambia has in the world in terms of mineral wealth. And I took the example of gold. I actually didn't know the symbol of gold, but I know it's quite valuable. So I was also thinking about it and thinking, okay, let's look at it from the point of view of trade statistics. How much gold does Zambia know it is exporting to the world? Different countries in the world in aggregate. Versus how much gold are the different countries in the world saying they are receiving from Zambia? So if we look on the right-hand side, the chart is telling us the lighter orange line is telling us how gold has been exported from Zambia to the rest of the world from 2010 to 2024. And then in the mirror, the darker line is telling us how the world imported gold specifically from Zambia, so the different countries in the world. And you can see there's a disparity, right? It's supposed to be one-to-one. How much I send to the world is how much the world receives from me. But this is not what is happening in that chart. And the disparity is talking about different forms of misreporting as well as illicit trade, right? So there is a gold market that is reported on the one side and not captured on the other. So in the early part of that chart, you notice that the world did not know that they were receiving a lot of gold from Zambia. It was going through third parties, through brokers and things like this. The world organized the market for gold. Things like making sure that gold is properly recognized, properly certified by source. Gold that is coming from child labor, from other illicit activities is not included. So you see from about 2019, the two lines almost converge, right? Meaning that the market between Zambia and the rest of the world is becoming more organized. But as fate would have it, if you don't organize your domestic market, and you can see the quantum of business that is being done in terms of gold. So it's moving from 200 million, and these are in dollars, by the way. So gold trade moved from about under 100 million in 2010 to $1.4 billion, just gold alone in 2024, as reported by the rest of the world. But because the market domestically was not well established and fixed, traceability of the gold, so the local players saw that there's a gap, and they went under. So the gold that is now being reported by Zambia to the world has gone down to almost 200 million from almost $1 billion in 2023. The point being, we need to invest a little bit more in productive capacity in our public institutions and in our private sector to organize the markets. Gold is one, and there are many, many more examples that you can look at. Which I just thought that we would look at gold. So economic affairs is really trying to consolidate the economic gains. I think the government is in the right direction, putting money where it matters, but a lot more needs to be done to be very strategic about how you build the private sector, how you build your public institutions to be able to manage the resources that you are investing in. Social protection or consolidating the social gains, again, right direction. Social cash transfer maintained at more or less the same level. Pension fund is no longer highlighted as a big budget item, but it's there in the main budget if you look at the yellow book. Cash for work, I didn't check quite closely, but it looks like this is one of those things that came with the drought and is now being phased out as a program, which as I think if this has actually happened is a really big move on the part of the government, because in going into an election year, you expect those pressures to bear on the government to the extent that they maintain programs like this because they resonate with the grassroots voters, right? So if they're taking it away, then it shows quite a bit of fiscal discipline. Food security pack, quite a significant increase. Again, trying to enhance social protection. I'm sure I'm out of time, so I'll just go to my very last slide and very quickly run through this. I think here the message is simply that when you are configuring your budget, especially on the expenditure side, think through the value for money in terms of, are you spending where you will build the most productive capacities? So there are areas that internationally have been recognized. Human capital development is one. The government has put a sizable amount on health or education and water and sanitation and so on. But if you notice that the expenditure that is there is mainly recurrent. So the capital expenditure and things like that is missing. That limits the transformative nature of our budget. So I understand 2026 is about consolidating. So we're not focusing on transformation. So maybe that is the reasoning. But I think looking further ahead, it will be very important to think about how do we make this a transformational type of budget going forward beyond 2026. I think another missing link for me is the gap in the health sector that's been created by the going under of PEPFAR and USAID. I think there was a big parallel program where HIV, malaria, and TB were financed by the US government predominantly. I'm not sure where within the 2026 budget that deficit or that gap is being covered. I think that's a hidden conversation that needs to be brought out a little bit more, because it could potentially be a crisis in the making. If people are taking off drugs like ARVs, and then later on you put them back on the ARVs, there's a very strong likelihood of them developing their bodies resisting resistances called pharmacovigilance, right? And if that happens, then all the gains that you had in health in HIV start to get eroded. Because right now, many of the people who are on ARVs, if they're taking them consistently, have suppressed their viral load to an extent where they can't even infect other people. But those gains can easily be eroded if you take them off those life-preserving drugs. So it's a very important issue, but I have not seen very well its placement within the budget. I mentioned before institutions. So right now the debt story is dominating everything, but investments in governance and regulatory institutions, their capacity to regulate. For example, Constituency Development Fund has increased significantly. But what do we know about Constituency Development Fund? What kind of information systems have we put in place to see if we are actually getting the right value for money? And there are many such programs that the government is doing. Private sector, again, we have the same CDF, Constituency Development Fund. We have empowerment programs. We have now mine support programs. Right direction, but kind of fragmented. And for it to be transformative, you need a more organized sort of industrial policy-led push. The usual suspects are there: energy, transport, technology, ICT, capital, natural capital. Again, government spending quite a bit there, which is positive for diversification. I think we're still weak on environmental spend, something that we'll need to think through. Structural transformation, again, stabilization has set in, but moving towards transformation requires improving your industrialization, value addition, sophistication of your production lines and things like that. And those are the investments that are now needed by both the public sector and the private sector. So overall, a really good budget, locking in consolidation, but a lot more needs to be done to think about how do we start to move on the path of transformation. Really thinking about how to add value, get higher value products that are being produced in Zambia and taken to the rest of the world compared to primary products. Finding robust markets. Zambia as a population is relatively small, but within the region, within the world, we have a very big market, but it depends on us not only seeing those markets, but being able to reach them.
With that being said, I introduce the names of the panel members. So we have Mr. Emmanuel Mumba. He's coming from Zaki. He's the acting CEO at Zaki. We have Mr. Chelo Caesar, who has been ably introduced, our local economist. We channel into the questions. The first question is for Zaki. What are your primary thoughts about the budget that was presented by the Minister of Finance last Friday?
Thank you so much. Just to provide a brief background. So the Zambia Chamber of Commerce and Industry is the apex body representing the interests of the private sector. And I'm so happy that the president from Lusaka Chamber is present. We are grateful. So Zaki does draw membership across all sectors of the economy, from mining, agriculture, and we draw membership across the country. So in answering the question in terms of our perspective on the budget, I think it's clear that with the geopolitical situations, the Trump effect and the like, we cannot rely on external financing to support our economic transformation agenda. And from that, over the last few years, we have observed government, being more deliberate in terms of raising resources from the domestic market. And it's something that is quite commendable in terms of us building resilience and also providing a good platform to enable private sector to grow. And we also have observed quite, progressive policies. Remember, we are still facing the effect of the COVID-19, which has been compounded by climate change issues. And there have been deliberate policies which, from the Chamber's perspective, were so important, especially in the energy sector. I think one of the major challenges was the issues of cost reflectiveness in the mining sector, the issues of unstable mining regime. And these policies have been put forward with private sector input. There's now stability, and we have started witnessing at least some level of investment in the mining sector, which is speaking towards our vision to expand copper production to 3 million metric tons. And also from the budget perspective, I think one of the challenges that we faced was investment in transmission lines. And we have observed as well that there is deliberate initiative, one, to continue building resilience, and also investment, especially in the Eastern African connector, which is significant for us to really have that power that is needed for us to build that resilience and speak to the economic transformation that we endeavor to do. Another issue that we have observed from the budget is in the manufacturing space. I think there is a critical realization that manufacturing is very critical, and there have been measures that have been put in place to try and speak to that sector. But for us particularly, we are so much focused on building the copper value chain. And our main focus is making sure that we have the raw materials available, especially for firms in the copper value chain. The challenge that has been there is that most of our private sector players are unable to find the raw materials for instance, those that are in the copper manufacturing. The cost of raw materials, again, is another conversation that we should have. We have a situation where most of our private sector players are procuring copper based on the London metal pricing, which is not encouraging local participation, local value addition, and they're failing to compete with other regional players. And this is a conversation that we'll continue to have with government, but overall, it's a very commendable budget, and the emphasis on domestic resource mobilization is important. But as we are doing that, we don't need to stifle the private sector in terms of the taxes and other issues that will continue putting our private sector at a less competitive point. I think with those few remarks, that is our reflection overall on the budget.
Thank you very much, Mr. Mumba, for that. For Caesar, when you look at the microeconomic objectives, so you spoke about the inflation being moved from the target being moved from medium term to short term, the 6 to 8% target for 2026. Now, bearing in mind that next year is election year, isn't there a temptation to overspend and therefore not hitting the 6 to 8% target?
Yeah, I think it's a wider sort of political economy issue. I think there is always a risk in an election year to overspend. From a budget perspective, in terms of the way the budget has been authored or crafted, it looks like there's that will to avoid overspending. So if you saw the fiscal deficit has been restricted some more, meaning that borrowing will be restricted. If you paid attention in the press, you noticed that the government maintained the program with the IMF had ended this year, but they have gotten an extension towards the end of next year to help have a mutual accountability partner that has a program hanging over your head that prevents you from overspending. So I think the crafting as well as the posture or the body language of the government, they seem to be in the right direction. Key programs like cash for work are being taken away or being minimized, and yet the temptation to spend would have been there. So with those potential of expenditures being kept in check, I would expect that you won't see significant overheating in the economy. That would then...
Another target is obviously to grow the economy by about 6.4% of GDP next year, and increase production of copper. So the production of copper is projected to be around 1,069,000 for 2026. But it would be good to also look at where we are. So we are coming to the end of the third quarter. The projection is to hit 6.6% growth this year and to hit 1 million metric ton production of copper. So how are we moving? We are in the 9th month so far. Are we still within the 1 million target which would be a first since 1964 that we'll be able to hit? In fact, even hitting 900,000 will be a record, because our highest, I think, was about 887,000. Are we seeing that happening this year?
Really tough question. I'm not an industry expert in mining by no means. My guess is as good as anyone's guess in the room about the specific outturn on copper production. But what I will say is prices for copper are still quite bullish right now. I think because of the global recognition of copper as one of those critical minerals. And if you understand the critical minerals story, there are certain minerals that are controlled by certain global players, such as China, that can influence the supply and therefore the price. Copper is not one of them. So copper is still fair game. And there's a lot of investments that are coming into not just copper mining, but all the logistics around copper production and trading. That is certainly making a huge contribution. But if you look at the Zambian economy, another big factor is not just mining, it's agriculture. And agriculture, we went from a drought year to a bumper, a significant bumper last year. The expenditures that we are seeing in 2025 and that we expect to see in 2026 are in the direction of a big agro economy. And those lend to growth, in my argument, more than even copper does. Copper lends itself to a healthier external balance or balance of payments, but in terms of GDP growth, I think agriculture and the services like transport and logistics, wholesale and retail trade and so on are arguably bigger contributors to GDP growth.
Okay, I just wanted also just to provide comment. When you look at the agriculture projections, and like Mr. Caesar mentioned, I think there is a growing emphasis for us to really ramp up production in that space. But there is a major challenge that is there within the private sector in terms of policy consistency. What has been happening is that there have been a lot of policy inconsistency, especially on the export side. And what has really happened is that we have shrinked our market share in terms of regional access. And what has that done is that, you know, there are instances where different private sector players who are in the agriculture space, for instance, and have got the commodities to export, but because of the instabilities in the export policies, they are unable to really, you know, export to and access those regional markets. So what will be very important, even when government wants to ramp up or increase production in the agriculture sector, is that for us to really secure a regional market, we need to have a very, very strong export policy, and stability should be a core issue around that. We cannot compete if 6 months or 3 months later or whatever, we are changing policies, we are closing our borders, we are in a global competitive environment, and for us to really, you know, make sure that this share of market is secured, we really need to address that issue of policy inconsistency. Speaking on the mining sector, I think the minister did highlight some of the production and areas of, the mining areas where we anticipate to get those numbers. For instance, Mopani, KCM, of course, and other mines that have come live. And we can see that beyond 2025, 1 million metric tons is very feasible, provided, one, we remain on the track that we are, and also make sure that there is policy consistency. Remember where we're coming from, where we had changed the mining regime over 10 times, and we stagnated below 800,000 metric tons. And for instance, DRC, were below our copper production capacity, they have passed us beyond 1 million. So stability will be a very, very much important aspect for us to really even meet the 3 million tons that we talk about in a decade. But again, when you're talking about the mining sector, how well are we incorporating our Zambian suppliers and contractors in the value chain? So that also brings in the aspect of local content. For us to really drive the economic benefit of the mining sector, we really need to make sure that the Zambians really participate in the procurement processes, and also make sure that the artisanal small-scale mining are supported to really scale up and conduct safe mining. And we are happy that there's a provision in the budget and resources allocated towards making sure that artisanal small-scale mining are supported. But we need to move beyond just support and making sure that, one, formalization is beyond registering, and we need to provide capacity, we linked to make sure that we link them to the right resources so that they're able to conduct mining in a safe and also make sure that they are contributing substantially to the 3 million tons and other targets that we have set in the mining space.
Thank you very much for that. Talking about policy consistency, I think government has been talking about the importance of policy consistency, and this if you look at the 10 years from 2011 to 2021, which you spoke to Mr. Mumba, there was a lot of change in tax policy, impacting the growth of, among others, the mining sector. But the past 1 year, what we have noticed is there is also a bit of more tax changes that are coming up. So if you remember the budget presentation for 2020, for this year, when it was being presented in September, there were a few proposed tax changes. But what we saw in December were more tax changes passed. So we had PTT, proper transfer tax rates that were increased. We saw an introduction of the extension of the losses being carried forward to future years. There was that restriction introduced of 50% taxable profit. Then, just before the budget presentation for 2026, we see these pre-budget amendments being made. So we are basically looking at in the past year, we are seeing about 4 tax pronouncements. What are your comments? What's your thinking? Are we comfortable with the presentation that was made and the proposals that have been espoused to take place by 1st of January? Or we expect surprises again in December that will not speak to what the minister presented? Your comment on that?
That is a concern from the private sector, especially that, a country like Zambia, which is land-linked, competitiveness is everything, and making sure that the business environment is conducive for businesses to thrive is very important. So we expressed our concerns, especially with the January tax proposals that were put forward, and also the supplementary budget amendment that were made. But overall, what we are grateful is that government has provided a platform for private sector to really engage on some of these issues. And we have continued to highlight some of the concerns that are coming from the private sector. And especially on the small players, because they don't really have the voice and also the platforms to really highlight some of those. So through Zaki and the Minister of Finance, they have provided us with a platform to engage on those concerns. It's a concern within the private sector, and we saw some of the reversals that were made on the gemstone and precious non-traditional export. So those concerns are quite extensive, but we have continued to really engage through the government, through the platforms that have been provided, to continue highlighting some of the impact that those proposals are having. And I should highlight on the energy side, you remember we had the emergency tariff adjustment, and we have continued to highlight that. And there was a commitment to say, if you move or commit paying up to a certain level, of course you are sure that electricity will be available for your production processes. But maybe sometimes that is not the case because of other issues and other challenges. But we have continued to really amplify on those concerns and make sure that government is really made aware of some of the impact, especially on the investment side, and private sector confidence in the market, and we want to achieve.
Thank you very much. We go into the question and answer session. So you can take 3 questions at a go to be handled by our able panelists here and the ZRA.
Thank you. I'd be very interested to get a comment from the panelists on, in the budget, the minister announced that the FISIP voucher was to go completely e-voucher this year, which I think is something that the industry is very happy about, but they're not very happy about the implementation and the financing of this. And I know with government's appetite for decreased borrowing, as you've already mentioned, this represents a challenge because most of the e-voucher has been financed by the private sector with very late payments from government. And I think the principle of the e-voucher is very strong. It promotes the rural economy by downstreaming a lot of input supply to agro dealers, who generally are the backbone of a lot of the agricultural rural economy. And this, I think, is really important for the development and particularly for government's ambitions around some of the hectareages that they've made announcements on. So I'd be interested to hear what your comments are on that, because for me, this is a big challenge, I think, for our sector. And I think just to add another bit of information on top of that, we've seen the FRA purchase significantly above its intended budget, which again must put an awful strain on cash flow, on the government's cash flow. And so again, with their reduced ambitions to borrow less, how will this be funded? Again, this directly impacts the rural economy. And we're coming up now for another rain-fed agricultural season where government makes all these announcements about farmers being ready, but yet they're not providing the money to the very poorest in our country. And you know, for me, I think this really needs to be addressed as a matter of national significance.
My name is Donald Mumba from the Zambian Business Times. I liked, I think one of the presentation by Caesar is something that we had covered some time back concerning gold and how much gold is being exported from Zambia and how much gold the outside world is recording as something that they are importing, obviously using the global trade rules of origin. I know we've got some ZRA officials. I've seen them answer some questions. Our particular interest, and maybe something that you could address, possibly Caesar, you could add one or two, is I know that Zambia has quite a number of tax agreements, you know, with different countries. And I think one of the countries that, according to the ZBT research that we did, showed up with the UAE. Are we saying that we don't have a tax agreement with the United Arab Emirates? Or is it something that you can look at so that it could be easy in terms of, you know, tracing which way and which direction it is going? Of course, I wanted to add a proviso. Obviously, when we check with the market intelligence also tells us that some of it is being traded via Zambia. Obviously, that's from the DRC and some of the neighboring countries. But the argument still stands that if the products are passing through the jurisdiction, there is an opportunity there for some, you know, revenue to be collected. So a comment from ZRA would help.
Thank you so much. Mine is on the withholding tax that has been increased on yields on investment in government securities. So obviously it's good for the government. It increases the revenue for social development, but it has raised a lot of emotions amongst investors, especially that the new tax has been applied on securities that were subscribed years before this increase actually was effected. So government is intending to increase domestic revenue, obviously through issuance of government securities, but on the other side, they're making these securities a bit unattractive for especially local investors, because what was making these government securities attractive was the fact that they were providing fixed income, predictable income, and guaranteed income. So we may see a situation where maybe the competitive bidders may counter-react by bidding higher, actually. So it may push the yields even higher so that that loss that will arise due to the increase in taxes is not passed on to their income. For me, really, it's a question, I'm asking the question that, will these government securities still qualify to be placed under fixed income? when there's this now uncertainty that has come up, because it's becoming like a risk. You're investing, you make your cash flow projections, and then midway through your investment term, your income is reduced. So do they still qualify to be classified under fixed income? That's number one. But I still want to encourage investors that do not fall prey to quick rich schemes. Continue investing. Reduced profit is still profit. Thank you.
Thank you very much. That's Madam Memory Banda, the savings and investment guru. So we have 3 sets of questions that have been given. Mr. Chero, you can attend to the first question on FISP.
Thank you so much. I think when you look at our ambitions, for instance, I think the agriculture sector has been prioritized as one of the critical sectors to drive economic transformation. And when you look at some of the challenges that the sector has been grappling with, especially when it comes to smallholder farmers, is the issue of diversification of the varieties as well, and extension of services. And in that conversation, and that's where the e-voucher system is coming into conversation, was that we need to incorporate more private sector players in the agriculture sector. But if you are having challenges in terms of dismantling some of these areas, I think it's a challenge, and it does disadvantage the private sector. And I think in the budget, I think the minister did highlight some of the growing government areas could be private sector institutions and the like. And it's a conversation that we should be having if we really want to grow this sector. I think there should be timely disbursement of resources to have that liquidity for private sector to reinvest and grow their businesses. If agriculture really has to contribute to the surplus that the minister spoke of and what government tries to do, I think we should begin to address some of these domestic areas and make sure that liquidity is available for private sector growth. There was also an emphasis to say private sector players can really even provide extension services to smallholder farmers. And it has been one of the major challenges in terms of them accessing the right information and also making sure that they have the right equipment to grow their productivity. But if you are having challenges in terms of dismantling areas, I think it does disadvantage the private sector, and they're hesitant to really move into the market. So it's a conversation that we should continue having and see how best we can resolve it. Timely disbursement of resources will surely put the agriculture sector at a good platform, and as well as make it more competitive to really speak and unlock the economic transformation that we envision this country to move forward. So it's a very, very significant question, and it's something that we should really try to address as a nation going forward.
Thank you very much. Next question was on gold. Your comment, Caesar, before we ask the Zera to also talk about is there an agreement with the UAE? How can we also get more revenue for the gold that is passed through Zambia?
Thank you very much. I think it touches on something that we already covered when I was doing the presentation. I think even for the FISP as a program for gold production and trading, I think it all goes down to how do you reform and strengthen your public institutions to a level where they are able to guide proper functioning of these markets. I think there's a big question mark, I think an elephant in the room around the leadership of Ministry of Agriculture to handle the aspect of FISP properly, to handle FRA. I think it's an age-old challenge, and I think many players have come and gone and are trying to bring some sort of normalcy to the situation. I think the gold situation is a growing interest area, and I think it would be important to get the Ministry of Mines and Minerals Development to weigh in from both a regulatory but also a sort of policy oriented side in terms of what incentives can you give to a market to reorganize itself, to formalize, to grow, to regularize, to normalize the trade of gold. Because currently what seems to be happening is some gold is originating from Zambia, other is originating from neighboring countries and is aggregated here. And because of our sort of open spaces, our open economy, people are able to carry the gold in suitcases that they've purchased here in a very sort of informal, disorganized market, and are able to normalize things in Dubai, in Switzerland, and so on. And that's where you get the disparities in accounting for the gold trade. So these are going through systems that are not connected to the likes of ZRA or the ministries. It's almost illicit, right, from our perspective. But they are able to accommodate those transactions on the other side. That is where I suppose it would be important to have these sort of bilateral treaties with different countries, so that even things like as basic as information exchange between customs authorities is almost seamless. And with the digital age, that's something that is possible. But maybe ZRA would want to weigh in with a bit more detail or nuance on that.
ZRA.
Okay, thank you for those important questions. Just touching a few on the highlights, my colleagues will supplement. The issue on the gold, yeah, that's one thing, not only gold, I think minerals in general. We are enhancing our controls in terms of monitoring the exports of minerals from our country, from production up to a point of exports. So we are acquiring a number of non-intrusive technologies, like I think it has been mentioned there. Then in the context of sharing of information, we are now part of the Global Forum on Transparency and Exchange of Information for Tax Purposes. So we will leverage on such kind of collaboration. And customs already is enhancing its customs-to-customs data exchange. So that will be also another avenue of monitoring and controlling illicit movement or unaccounted movement of gold and other minerals. A bit on the securities, maybe just a general comment, because there's strong link with taxation. Maybe it's a signal, government, that you use this money somewhere else. And we're giving, because when government goes into the market, people complain that government is crowding out the private sector. So it's probably a signal for us to go and invest somewhere else. And of course, if we go, the rates go up. If more people go into these bonds and securities, it means there's little left for the private sector to leverage for their investments, because the government is going and propping up the interest rates. So again, affecting the growth of the economy in terms of private sector activity. So maybe we look at it in the other side. And in any case, the more we go in bonds, the more the rates go up, the more taxes will be required to pay back those. So if government is pulling off, means we can do more economic activity, and as long as everyone plays their role, they are able to pay taxes, and that will reduce even the burden of tax on everyone else. So that's what I can say, I think, on a high level on those items. Okay, I'll give my colleague just to add a bit.
So on the issue of an agreement with the UAE, yes, Zambia has a double taxation agreement with the United Arab Emirates, which came into force in 2023. And the agreement has an article that allows us to exchange information, meaning we can request for information, and the contracting party can also do the same. However, the use of this article is not as simplistic as it may sound, where you can just request for information even where you do not really have evidence as to the non-compliance of a particular taxpayer. The article specifically requires that the information being requested should be foreseeably relevant. So it's not an article that can be used for fishing expeditions where you are merely suspecting that there's some gold being smuggled out of the country without really having any tangible evidence. But in situations where we have some backing facts, yes, we can request for information from the UAE using the current DTA. Thank you.
Very much for that input. I've been guided that we are racing against time. So if we have additional questions, please, you can share them with us, and then you can share them with the team at the far end here. They will collect those questions and will be able to respond to you after having engaged the respective bodies. So this time I wish to sincerely thank the able team of our panelists, Mr. Emmanuel Mumba from Zaki, Mr. Caesar Cello, our keynote speaker, and the team from the ZRA led by Mr. Sigande. So thank you very much. A big round of applause for the team here.
Thank you very, very much. Thank you, Kafumu. Thank you, our panelists. Thank you, ZRA team, and everybody that asked the question. I think it is important that we receive your questions. So if you can, please send them through our teams, and we will engage with the ZRA Ministry of Finance, and we can get back to you with a response. In the interest of time, I will request the presence of Mr. Douglas Ironside, our senior partner, to just give us closing remarks. But as he is coming through, we will ask on a few of you to just do some interviews. So if you are approached, please do not rush out. If you can, just give us a few words of review on what you've gained from these insights and ways in which we can improve. Thank you very much.
Thank you, Jonathan, and good morning, ladies and gentlemen. It is not my intention to talk to you for very long. I think we've had a very interesting morning with some excellent questions. So I think it really is just my main duty to thank the various participants and particularly the representatives from the ZRA this morning, for gentlemen from Zaki, and of course our main speaker, Mr. Chilo. Thank you very much for your commentary. As I said, I think we've had some excellent questions and from the floor as well, so thank you very much to you all for participating and challenging our speakers. I think just one topic that I would have perhaps liked to have heard a little more about is our long-suffering SMEs and owner-managed businesses, because At BDO, we have a long history of servicing that sector. Although nowadays I think we're very diversified in all types of businesses, all sizes of businesses, all sectors. But it's a very tough time for SMEs. There are very high costs. The power supply remains an enormous challenge for SMEs. The cost of compliance, and then the tax burden on SMEs seems to get ever more onerous instead of easier, in my view. I think, however, you know, if you are an SME, you're not already a client of BDO, please do come and see us, and we can give you as much assistance as we possibly can. So I think just to finish off my round of thanks, thank you very much to the BDO team for organizing the event. It's been excellent. To Debbie and the tax team, especially for sitting up all night on Friday night and preparing the budget booklet. And of course to all our clients and prospective clients, thank you for coming along and supporting this event in such good numbers this morning. I'm very grateful. I think I'll just close with one light piece of tax advice. Over the weekend, when you're sitting enjoying your reduced duty beer, just think of the opportunities to remove the penalties on your voluntary disclosures. So do come and see us about your voluntary disclosures as soon as possible. So thank you very much, everybody.